Eaton plans spin-off of mobility business. Eaton has announced plans to separate its vehicle and e-mobility segments into an independent, publicly traded company, a move intended to sharpen the company's focus on its higher growth electrical and aerospace businesses. The proposed separation, expected to be completed by the end of the first quarter of 2027, pending regulatory and board approvals, would result in Eaton and its mobility business operating as standalone companies with distinct investment profiles. Portfolio strategy aligned with secular growth trends. Eaton framed the planned spin-off as part of its 2030 growth strategy, which prioritizes electrification, digitalization, infrastructure investment, and aerospace demand. By separating mobility, the company aims to concentrate capital allocation and management focus on businesses with higher margins and more predictable earnings profiles. Paulo Ruiz, Eaton's chief executive officer, said the separation would allow Eaton to lead, invest, and execute for growth across electrical and aerospace markets, while giving the mobility business greater strategic flexibility as a standalone company. Mobility business positioned for independent growth. As a standalone entity, Eaton's Mobility Group would operate as a global supplier of engineered solutions for commercial vehicles, automotive OEMs, and off-highway applications. The business holds established positions in commercial vehicle transmissions and clutches in the Americas, as well as high-voltage EV fuses and valve actuation technologies globally. Eaton said independence would allow mobility to allocate capital more directly toward electrification technologies, system integration, and customer-specific innovation, particularly across heavy, medium, and light-duty vehicle markets. Implications for industrial and mobility supply chains. The planned separation reflects a broader trend among diversified industrial companies toward portfolio simplification and clearer alignment with long-term growth drivers. For suppliers and OEM partners, the move may reshape commercial relationships as mobility transitions to operating with its own capital structure, strategic priorities, and investment timelines. At the same time, Eaton's remaining portfolio becomes more tightly concentrated around electrical infrastructure, data centers, utilities, aerospace, and defense, markets experiencing sustained investment tied to energy transition, grid modernization, and reindustrialization. What comes next? Eaton expects to provide additional details on the separation during its fourth quarter 2025 earnings call on February 3rd, 2026. The transaction remains subject to customary legal, regulatory, and tax approvals, including the filing of a Form 10 registration statement with the U.S. Securities and Exchange Commission. You've been listening to Sustainability Soundbites by Environment+Energy Leader. For partnership opportunities, please reach out to our team.